According to FEMA, 2 out of every 5 business owners never reopen their doors after a fire, flood, earthquake, tornado, hurricane, or some other disaster damages or destroys their buildings, equipment or machinery, inventory or supplies. And 1 out of every 4 that do reopen fail within 1 year and shut down permanently. But not because they don't have insurance to rebuild, repair, or replace the damages. They fail because they no longer have the cash flow or ability to generate the revenue they need to cover ongoing business expenses and financial obligations, like mortgage payments, credit lines or business loans, equipment leases, payroll, taxes, insurance, and utilities, while the business is shut down during reconstruction. These owners have insured their business property, but not their business income. For example, a modern packaging plant in Los Angeles was entirely gutted by a fire one night due to a faulty electrical circuit.